analysts at Parthian expect the Sub-Saharan African Eurobond market to remain volatile, with global developments dominating near-term sentiment. Looking forward into the rest of the third quarter of this year, they note investors will watch for how the naira holds up if monetary policies loosen. Marvelous Adiele, fixed income dealer at Parthian, joins us now to unpack their latest fixed income notes. Thank you so much, Marvelous, for your time. Okay, so let's first of all get your thoughts about the primary drivers of the yield direction that we're seeing. We've seen it retreat a bit on the FGM bond side, domestic debt, of course. What's your feeling about the key drivers of sentiment right now?
I would say it's the government. So for Q2...
In terms of borrowing levels?
Yeah,
or what do you mean?
I think the government, the FGN has, they've retreated in their appetite, and they've made it clear to the market over the auctions that they are going for reduced borrowings. We've seen yields drop in the NTB auctions, that's the NTB PMA, as well as the bond auction. Last auction for the bonds, the new issuance closing at 17.95. So I think it's a message to the market that they are not looking to borrow as much as we would have expected.
Some are suggesting that we could see a cut of maybe up to 2 percentage points at some point as the MPC meets over the course of the year. How profound a cut are you anticipating, and what will be the likely impact in your view on yields? So
for rate cut, it's quite expected. We've seen inflation decline, and we expect inflation to keep easing through as we go more into the year. And in the primary market, in the fixed income market, we already started seeing a decline in yield. So our outlook is that we see continuous decline. The reduction in yields continue. Sentiments are that we've peaked, but then we can never tell until the federal government does something else. But then we've seen a decline since the last auction in June. So we expect rates to continue declining, and MPR cuts would further drive down rates.
You earlier mentioned that the government has already signaled their move towards borrowing less going forward. And obviously that's a major strategic direction that should impact how all players in the market react.
Sure.
So what do you anticipate in terms of, first of all, the issuance levels in the next auctions, and then, of course, yield levels?
So for issuing levels, we're yet to get the calendar for the Q3 and for the rest of the year. That's for the treasury bills and the bonds. However, given the trend in Q1, the federal government oversold about 900 billion, that's in treasury bills market, oversold just by 48 billion in Q2 in the bond market. So so we expect, first off, that there'll be a decline in offers across especially the bond market. So for treasury bills markets, probably the same offer would match maturities for the rest of the year, but we don't expect government to overborrow, and we expect to also see underselling at the auctions going forward.
What has been the level of foreign investor participation, though? Now that we've seen relative stability with the currency, I imagine that should give some more investors comfort to get further invested in the fixed income market.
Yes, we've seen investor FPIs, right, in the market, especially in the OMO space. So the federal government has been issuing OMO, and I think the last OMO auction was about 23%. That's discount for the OMO auction. So there has been some activity in that space, and I believe that the foreign investors are quite happy with the level of rates compared to the NTB auctions that are currently trading.
But don't you think that those rates should begin to now trend lower?
Yeah, they're trending lower. So I think in March, April, before June, the rates touched 24%. Right. But then at the last OMO auction, it was around 23% level. So they're also experiencing a decline in rates.
And this, should I say, naira stability, what's the general sentiment? It's the second half of the year, and I think that could be a major story going forward. Do you get the sense that that is the new normal now, naira stability, or do you think it's still fingers crossed?
I think the CBN is still on top of things. They've not done anything out of what's the trend. They've not done anything out of the trend they've started the year with. So we expect that they would remain on top of things to keep rates stable. And I believe that OMO auctions or OMO issuances, it's one tool that they've been able to use to stabilize it. So on the back of that, we don't expect the OMO auctions to go below a certain level, because that would keep the rates unattractive for the foreign investors. But then fingers crossed.
So in the short term, maybe you can just give some guidance. What do you anticipate on the fixed income side? Sorry, not the fixed income, I mean the T-bill side and the bond side. In terms of yields, what do you anticipate? I
anticipate a further reduction in yields.
But can you give us a range of what you're anticipating going forward?
So for the Treasury bills, we expect, so the last auction was closed at 18.84, and market has since been trading around 17% levels. So probably at the next auction, we should be expecting sub 18% levels. That's for the Treasury bills long end. And for the bond space, it's still not clear. But personal sentiments, the last auction, the 32s, the newly issued 32s closed at 17.95. And sentiments are that was because that was the first issuance for the bond. So probably in the bond space, we might see rates moving around or closing around 18.3, 18.5 levels, because that's where markets currently is on the mid-tenor bonds.
All right, marvelous. Thank you for
very much for having
analysis. Me. Marvelous, Adiele. Fixed income broker at Parthian, giving us some perspective on the Nigerian fixed income market.